You have $1,000 to spare and you have never invested before. In this video, I'll show you how I would invest those first $1,000. I will show you 4 options to invest, and also at the end of the video, I'll give you a bonus idea on how to compound your wealth to over $1 million. Hello fellow compounders, welcome to Always Be Compounding Club, where we share ideas to build and enjoy wealth. I'm your host Dennis Chen. I'm a full-time investor, Wharton MBA, CFA charter holder, financial book author, and an avid compounder. So let's get started. Here are the 4 options to choose from. Your choice will depend on the level of risk that you're willing to take. I'll list them in ascending order of riskiness. Option 1, buy I-Bonds direct from the US Treasury. I-Bonds are US Treasury bonds that are indexed to inflation. They have the full backing of the United States government, so they are very safe. The interest that they pay is adjusted twice a year in May and November. The interest has 2 components. Number 1, the real rate of return, which is the real interest rate adjusted for inflation. And the second component is the inflation rate adjustment, which in this case they use the CPIU, which is the Consumer Price Index for urban consumers. The interest that these bonds pay will never be below 0%. There are 2 caveats though. First, you won't be able to redeem the bond in the first 12 months. And second, if you redeem the bond within the first 5 years, you'll have to give up 3 months of interest. You can buy these bonds from the US Treasury at www.treasurydirect.gov. I'll place the link in the description below. Option 2, fund a highly diversified investment portfolio. I would use a 6-fund portfolio on M1 Finance. I call it my Core 6. I use the following 6 ETFs in my portfolio at M1 Finance. Let me show you the list in my iPhone. VTI, I'll allocate 45% to VTI, which is the Vanguard Total US Stock Market Portfolio. BXUS, I'll allocate 20% to the Vanguard Total International Stock Market, excluding US. VVR, 10%, Vanguard Small Cap Value ETF. VNQ, 10%, which is the Vanguard Real Estate Investment Trust ETF. VNQI, 8% allocation, which is the Vanguard Global Real Estate Investment Trust ETF, excluding US. And finally, AVDV, 7%, which is the Advantis International Small Cap. I've included the link to this portfolio in the description below. Option 3, buy Buffett's wife's portfolio. I would invest $1,000 in the portfolio that Warren Buffett designed for his wife. I've dove deeper in this in another video in my channel, so look for it in the channel. It is basically investing 90% in VOO, which is Vanguard's S&P 500 ETF, and 10% in VTI, which is Vanguard's Treasury Inflation Protected ETF. I've included the link to this portfolio in the description below. Option 4, buy the first stock of your new investment portfolio. If you've decided to manage a portfolio of individual stocks, then I would use these $1,000 to buy the first stock of a focused portfolio. This assumes that you did your research and you have a list of potential buys. I would buy the number 1 stock on that list and have a plan to continue buying top stock on that list every time you have another $1,000 to invest. Another option to this is to create a portfolio of stocks in M1 and buy fractional shares of a diversified portfolio that you've designed yourself. This is similar to option 2 and 3, except that in this case you'll be using your picks instead of the index. So there you have it. The 4 things or 4 options that I would do with my first $1,000 to invest. As promised, here's a bonus idea to compound your wealth to over $1 million. If I were graduating from college today and wanted a high probability plan to become a millionaire, I would use a simple plan and put it on automatic. Let's say you set up an account at M1 Finance and instruct it to automatically draw and invest $50 a week in the S&P 500 index. And once a year, I would adjust that $50 for inflation. If inflation that year was 2%, I would increase the automatic draw from $50 to $51. That is $50 plus 2%, which is $1. If you did this consistently, in 50 years, you would have close to $1.2 million in today's dollars. This is assuming that the S&P will earn its historical real return rate of 7% after accounting for inflation. The total amount invested over that 50 years would be $130,000, and you would have gained, or I would have gained, hypothetically, over $1 million from compounding in today's dollars. That's a simple way to have $1 million by investing just $50 a week, which is less than $8 a day, which is what most people spend on coffee and a snack. I'll put a referral link to M1 Finance in the description below. I use it myself. And if you use that link, M1 will give you $10 to invest, and the channel will receive the same amount. It helps grow the channel. Thank you very much for watching. Please post your questions in the comment section below. And if you've liked the content of the channel, please hit the like button and subscribe. See you all later, and remember, always be compounding. Take care.